The cracks in Russia's economy are no longer a secret. On the map of Eastern Europe, showing Russia and Ukraine side by side, what once looked like ironclad stability is starting to fracture. The Kremlin insists all is well, but beneath the surface, disaster is looming. For years, Vladimir Putin built his power around energy wealth, military spending, and promises of resilience. These pillars masked mounting risks. Now war, sanctions, and plunging oil revenue have exposed a dangerous truth. Russia's economic well is running dry. This is not a rumor, not a speculation. From the Kremlin's own reports to Reuters' financial coverage, the verdict is the same. Russia's economic foundations are buckling. The question is no longer if the collapse will hit. It's when, how badly, and what it will cost. For decades, Russia marketed itself as financially unshakable. Oil and gas exports accounted for more than a third of federal budget revenue, and surplus profits flowed into the National Wealth Fund, NWF, its main buffer against downturns. As of June 1, 2024, the NWF was about $141.5 billion, or roughly 7.1% of Russia's GDP, with liquid assets of about $56 billion. But that safety net has weakened sharply. Oil prices for Russia's Urals blend and ESPO blends have dipped well below what the budget counted on. In May 2025, the average oil price in rubles hit a two-year low, more than 40% below the federal budget's target. To keep the budget afloat, the government turned to its last cushion, pulling billions from the reserves. In May 2025, Russia planned to withdraw about 447 billion rubles from its fiscal reserves, about 1/10 of its liquid NWF assets, just to help balance the budget after the deficit ballooned. Russia also revised its price expectations. The 2025 budget assumed Urals crude would bring in a much higher dollar value per barrel. But the Economy Ministry now forecasts a much lower price, around $56 per barrel for Urals, far below earlier assumptions of near $70. So while the Kremlin still talks about resilience, the numbers tell a different story: depleted buffers, missed revenue, and rising risk. And if the savings are gone while oil revenue keeps sinking, what will the Kremlin sacrifice first? Its people or its war machine? So far, the answer is clear. The Kremlin is choosing the war machine. And that choice has turned Russia's budget into a battlefield. Military spending has surged to levels not seen since the Cold War, consuming a massive share of national output. In 2024, official figures showed defense expenditures climbing above 6% of GDP, nearly triple the level a decade earlier. That explosion in cost collides with shrinking revenues. Sanctions have slashed Russia's access to global markets. Oil and gas, once sold freely to Europe, are now forced eastward at discounted prices. In April 2025, the Economy Ministry admitted energy revenues would drop 24% below original forecasts, blowing a hole in the budget. Meanwhile, non-energy sectors offer little relief. Western technology imports have collapsed, leaving domestic industries scrambling for replacements. Factories face shortages of parts, while inflation gnaws at purchasing power. In March 2025, consumer inflation ran above 7% year-on-year, hitting food and housing hardest. The Kremlin insists this spending is sustainable, a patriotic duty to fortify the motherland. But the numbers suggest otherwise. A state can't fund endless war when its primary income is shrinking and its people are struggling to afford basic goods. And so, a new tension is growing inside Moscow. How long can Russia pour money into the front lines without bankrupting the home front? The answer is, the strain is already visible. By mid-2025, the federal deficit had ballooned to nearly 4.9 trillion rubles, about 2.2% of GDP. overshooting the government's own full-year target months early. To cover the shortfall, officials are floating new tax hikes and spending cuts, a sign that the Kremlin is running out of easy options. At the same time, Russia has slashed its growth forecast for 2025 from 2.5% to just 1.5%, citing high interest rates, shrinking demand, and the war's mounting costs. And the war machine keeps consuming more. Defense and national security will swallow nearly 41% of total federal spending this year, the largest share since the Soviet collapse. That imbalance is not only unsustainable, it's destabilizing. Even as inflation shows signs of moderating, the economy is slowing sharply, with growth projected at just 1.2% in 2025, a dramatic drop from 4.3% the year before. The cracks are no longer hidden in spreadsheets. They are bleeding into daily life. But can the Kremlin's propaganda keep Russians convinced that all is well? For now, the answer is yes. But the cracks are showing. State television continues to broadcast images of resilience, factories humming, markets stocked, and Russia supposedly thriving despite Western trade restrictions. Anchors repeat the line that the West is collapsing under its own crises, while Russia remains steady. But independent data paints the opposite picture. Consumer confidence surveys show households cutting back on essentials, with inflation and rising taxes undermining disposable income. In 2025, the central bank admitted that real household incomes had flatlined and purchasing power had fallen sharply compared to pre-war levels. Propaganda also claims the agricultural sector can replace imports, yet sanctions have cut off access to seeds and machinery. Yields are falling, and Russia has quietly increased food imports at higher prices, a direct contradiction of the self-sufficiency narrative. For ordinary Russians, the contrast is jarring. Grocery shelves may not be empty, but prices keep climbing while wages stay flat. The gap between state-run television and lived reality is widening. And as winter approaches, the question grows sharper. When everyday hardships become impossible to ignore, will Russians still believe the story their government is telling them? The answer is already visible. On the ground, rising bills and shrinking paychecks are colliding with propaganda that insists all is well. Utilities remain unreliable, especially as winter approaches. Russia's heating systems are outdated, and funding shortfalls make blackouts and freezing nights a constant threat, echoes of the 1990s economic collapse. Meanwhile, food was once a point of national pride. Today, it has become a source of anxiety. Western restrictions have cut off high-yield seeds and modern machinery, pushing Russia toward food imports at higher prices. For households whose wages lag behind inflation, even basics like potatoes and dairy are becoming harder to afford. But the strain does not stop at the kitchen table. The ruble has slid to record lows, forcing Moscow to tighten capital controls to stem the outflow of money. At the same time, a severe brain drain is hollowing out industries. Since the invasion began, hundreds of thousands of skilled workers have left, draining talent from sectors already weakened by foreign isolation. Because a war machine relies on way more than just soldiers and weapons, it needs a strong economy behind it. And without stable currency, investment, or manpower, Russia's ability to sustain its campaign in Ukraine weakens by the day. And in conclusion, that is the core of Russia's crisis.